Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the wild world of markets. Today, we've got a lot to unpack from a volatile session on Wall Street, with tech taking a hit, some surprising sector moves, and big news on the policy front. So let's jump right in and break down what's moving the needle for us long-term investors, while also keeping an eye on those short-term swings. First up, let's talk indexes because it's a mixed bag out there. The Dow Jones took a step back, sliding about 0.5% after hitting record highs earlier this week. Meanwhile, the Nasdaq got hit harder, dropping close to 1.7% as tech stocks led the sell-off. The S&P 500 wasn't spared either, down over 1%, and the Russell 2000, which tracks smaller companies, also slipped by about 1.5%. Volatility is definitely in the air, with the VIX spiking nearly 6%, signaling some nerves among investors. For us long-term folks, this kind of pullback isn't a panic button. It's a reminder to stay focused on fundamentals, but we can't ignore these short-term jitters either. Diving into the big movers, let's start with the losers, because tech is the story of the day. Broadcom took a massive hit, down over 11%, after their latest earnings and guidance failed to impress, especially on the AI front. This is adding fuel to the AI bubble fear narrative that's been floating around. Micron Technology also slid nearly 7%, and other names like Arista Networks and Vertiv saw significant drops. For long-term investors, these dips in high-flying tech names might scream opportunity, but the near-term uncertainty around AI spending is something to watch closely. On the flip side, there were some bright spots among large caps. Tesla bucked the tech trend, climbing close to 3%, showing resilience amid year-end promotions to boost deliveries. GE Aerospace also had a strong day, up nearly 4%, continuing its impressive run this year. Other gainers included Toyota and McDonald's, both up over 2%, offering some stability in a choppy market. As long-term players, these steady performers remind us of the value in diversification. Don't put all your eggs in one tech basket. Looking at the market movers by volume, Nvidia was active as ever, but couldn't escape the tech rout, down over 3%. Broadcom again dominated headlines with heavy trading on that double-digit drop. Tesla, on the other hand, saw strong volume with its gains, showing investor interest remains high. Oracle also caught attention, slipping close to 5% amid reports of delayed data centers for OpenAI, adding to the AI skepticism. These names are shaping the market narrative right now, and for us, it's a cue to monitor how these short-term stories evolve into long-term trends. Now let's zoom out to some broader economic news that's setting the tone. The Federal Reserve's recent rate cut of 25 basis points was expected, but the split among Fed officials is raising eyebrows. Some, like Chicago Fed President Austin Goolsbee, dissented, arguing it's too early to front-load cuts, with inflation still a concern. Looking ahead to 2026, there's uncertainty about the pace of future cuts, especially with a cooling labor market and mixed signals on jobs data. For us long-term investors, this means staying nimble. Interest rate sensitivity could impact sectors like real estate and utilities more than we think in the medium term. Another headline grabbing attention is President Trump's potential moves on marijuana reclassification, which sent cannabis stocks like Canopy Growth soaring over 50% today. It's a speculative play, but if federal restrictions ease, this could be a sector to watch for long-term growth, though it's still early days with plenty of regulatory hurdles. Short-term, it's a hot topic, but we need to see concrete policy before jumping in. Shifting gears to earnings, it's been a busy week with some heavy hitters reporting. Costco crushed expectations with strong e-commerce growth, reinforcing its defensive appeal for long-term portfolios. Lululemon also popped after beating on sales, though profit margins took a hit. Still, their international growth is a positive sign. Broadcom, as we mentioned, disappointed, and Oracle's results added to tech sector woes. Looking ahead, we've got Adobe and Nordson on deck, which could give us more insight into software and industrial trends. For us, earnings season is a goldmine for spotting companies with staying power versus those just riding hype.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Circling back to the broader market outlook, analysts are still bullish on the S&P 500 for 2026, with some projecting it could hit as high as 8,200, driven by AI-led earnings growth and Fed easing. However, there's caution around elevated valuations and potential volatility. As long-term investors, this is a reminder to balance growth expectations with risk management. Don't chase every rally, but don't sit out the big trends either. On the Nasdaq front, the tech sell-off this week, led by AI concerns, has some wondering if we're seeing a bubble forming. Oracle's delays on data centers and Broadcom's vague guidance aren't helping sentiment. Yet experts like Tim Seymour argue it's too early to ditch AI stocks completely. There's still long-term potential as the economics of AI evolve. For us, it's about patience. Short-term corrections in tech could be buying opportunities if you've got a multi-year horizon. Over the past week, some large-cap gainers stood out. Rocket Lab USA surged nearly 30%, riding space tech hype, while Ciena jumped over 21% on strong earnings tied to AI infrastructure. Carvana also impressed with an 18% gain. These weekly movers highlight pockets of strength outside the usual suspects, and for long-term investors, they're worth a closer look for emerging themes. On the flip side, weekly losers included Credo Technology, down over 16%, and Alnylam Pharmaceuticals, off nearly 12%. Marvell Technology also slipped close to 11% as tech weakness persisted. These declines remind us that even strong sectors can face short-term headwinds, but they don't necessarily derail a long-term thesis. Keep an eye on fundamentals here. Sector-wise, basic materials led the pack over the past week with a gain of nearly 3%, followed by industrials at 2.75%. Communication services and consumer cyclical also showed resilience. These moves suggest a rotation into value and cyclical plays, which could be a hedge against tech volatility for long-term portfolios. On the downside, energy was the only sector in the red for the week, down slightly, reflecting ongoing pressure from oil prices. Tech, despite its weekly gains earlier, ended on a sour note with today's sell-off. For us, this sector rotation is a signal to rebalance if needed, ensuring we're not overexposed to any one area.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.